President Trump made headlines again recently, and this one could matter a lot if you're thinking about buying or selling a home. A couple of weeks ago, he announced plans to use $200 billion sitting inside Fannie Mae and Freddie Mac to buy mortgage bonds. Now that might sound complicated, but the goal is actually very simple. Bring mortgage rates down and make homes more affordable. Here's why this matters. Mortgage rates are closely tied to the bond market. When the government buys more mortgage-backed bonds, demand goes up, bond yields go down, and when yields fall, mortgage rates usually follow. Lower rates mean lower monthly payments, and that's exactly what buyers have been struggling with. And this is something the president can do without needing approval from Congress. Right after this announcement, we actually saw mortgage rates briefly dip to around 5.99%, which is lower than the 6.25% range we had been seeing. That tells us this move can have an impact, at least in the short term. Now, will this permanently fix housing affordability? Probably not by itself. This strategy can help create short windows of opportunity, but they can't keep buying mortgage bonds forever. That means there may be moments where rates dip. If you're paying attention, you can take advantage of them. That's why staying connected with your lender right now is crucial. There's another important piece here called the mortgage spread, basically the gap between the 10-year treasury and a 30-year fixed mortgage. That gap got extremely wide in 2023, which helped push rates higher. Recently, it's been shrinking, and that's a good sign for buyers. So what's the takeaway? There are three things you should be watching closely. First, inventory. If rates dip even a little, demand can spike fast. Buyers need to move carefully but confidently, and sellers need to understand what's happening in their local market. Second, competition. When rates fall, people rush back in. The buyers who win are usually the ones who move before the crowd shows up. And third, timing. A lot of people wait for spring, but historically, early movers, especially during short rate dips, often get better prices and better payments. This move from the White House is a step, but it can't be the only solution. Long-term affordability will require bigger policy changes, like updating capital gains exemptions. That haven't changed since the 1990s, even though home prices have tripled. So for now, stay informed. Stay in touch with your lender partner and work with a local full-time real estate professional who's watching the market daily. Because even short-term rate relief can make a big difference if you're ready to act when the opportunity shows up. If you'd like to know more about the current real estate market and how to maximize your home's value, contact us for a free strategy session. Thanks for watching.